Hi, my name is Cassandra. I'm with Equitas Advisors. Welcome to Life Lessons. Every month, I'm going to tell a story about an experience that we had with a client and how we were able to help that client. This week, we're going to talk about a really lovely lady named Linda who was 74 years old, actually turning 75 very soon. The broker had come to us because Linda's family was looking for a life insurance and long-term care solution for their mother, Linda. As it turned out, they were already talking to a CFP and they were getting some proposals from him. We took a look at what they were getting and we thought we could do better. Because long-term care insurance was basically unavailable in the standalone form due to Linda's age, we decided that our best strategy would be a hybrid strategy that utilizes a life insurance policy for long-term care expenses. This means basically that when Linda is ready to access those long-term care funds, it will be on a tax-free basis via the IRS per diem allowance, on a dollar-for-dollar basis against her life insurance death benefit. The best part, unlike long-term care, whatever she doesn't use goes to her beneficiaries. So here's the story with Linda. She was in really amazing health, and we were all set to get a preferred or even a preferred best risk class because, for her age, she was in fantastic shape. And upon receiving her medical records, we noticed that there was a TIA, which is sort of akin to a mini stroke that was listed in her records. Although we had applied with several companies, we had narrowed in on Prudential and their hybrid life insurance product. Unfortunately, when Prudential received the records, they gave her a substandard rating. We went back to Linda and her family and asked them about the medical records and the TIA mentioned. It turned out that according to Linda, she never had a TIA or any kind of other neurological disorder, and that it was a typo that one of the doctor's assistants had accidentally added while doing her pre-examination interviews. What happened from there is that every time she went back to the doctor, that background interview would recur in the notes of every single visit that she had. We went to work calling the doctor's office several times and then sending registered letters copied to our attorney's office, stating that if this was indeed a mistake, he needed to amend those records immediately and provide us written proof that he had done so. This went on for a month until the records were fixed. After going back to underwriting at Prudential, we were able to get Linda a preferred rating, saving her tens of thousands of dollars annually. We ended up placing the case. It was a $35,000 annual premium. The broker who had brought us in to help his client was ecstatic. Of course, the client was extremely happy with the diligence and work we put into the case. That is what we do. We fight for our clients and the brokers we work with.